Konnichiwa, and welcome to the second panel in today's Building Markets Together, Japan 2021 Digital Summit. My name is Michael Mervyn Jones, and I look after the commercial content primarily for the Asia markets here at EEX. Now, in contrast to the previous panel, and indeed the next panel, which are very heavily focused on Japan, for this session, we're going to zoom out a little and examine the region of Asia through a wider lens. More specifically, we're going to look at Asia's place in the commodity trading landscape and also examine the factors that have driven the massive development in Asia in recent times. I'm very happy to say that I'm joined by four people who are as equally passionate about Asia as I am. And thankfully, they know a little bit about Asia too. So with that in mind, let's meet today's panel. First up, we have Erland Engelstadt, Markets Development Director at EEX. Hey, Erland.
Hey, Michael.
We're also joined today by Frank Kleipzig, who's President of RWE Japan. Hi, Frank.
Hi, Michael.
I'm also very happy to welcome Ria Ishibashi, who is the Energy and Strategy and Development Lead at Tradition Asia. Hey, Ria.
Hi, Michael. Thank you for the intro.
And last but not least, someone who I guess everybody will be familiar with today, Mr. Stefan Riediger, Director of Power Derivatives here at EEX. Hey, Stefan.
Hey, Michael. Hi, everyone.
Now, when I think I think we'd all agree that when it comes to the region of Asia, especially in commodity trading, we've seen Asia perform a meteoric rise in the past decade. But what is driving this massive growth? Erland, I would like to come to you first. You've spent your entire career working in commodities. I'm working in Asia, in Singapore primarily, but also in Hong Kong, in Korea, and also more recently in Japan. So you'd be a great place to start. What do you think is driving this meteoric rise in the development of commodity trading in Asia?
Yeah, Michael, that's a big question, really. I think I think aside from one of the primary catalysts in markets that kind of involve welfare of people, social welfare, food security, stuff like that, there you might have some regulatory catalysts. There might be some regulatory changes happening to support building up markets. But I think in general, the commodity markets in Asia have followed, faster but similar trajectory to those in the more Western markets. So, the initiation of a spot market mechanism is very much key. It brings transparency to the market. It allows for indexation of commodities, which again leaves the door open then for risk management through derivatives. So I think this general kind of evolutionary path of commodity trading has gone much faster in Asia, and it's certainly picking up pace as well, which has led to independent markets growing up in Asia, and markets that are not necessarily always looking to Europe or the US for their price information.
Okay, thanks for that, Erland. I mean, some estimates that I've read in recent times are putting Asia being responsible for in and around 50% of all commodity futures trading. That's a big number. And especially when you put that into context, that is more than Europe and the US combined. Frank, I'd like to bring you in here now. You have a very impressive record in commodity trading, obviously starting off in Europe and then moving on to Asia, more recently in Japan. What's your thoughts here? What do you think is driving the development of Asia?
Yeah, I generally agree with Erland. I think we have seen similar developments in the US, also Europe. First, you have the old long-term contracts, then more trading comes in. The point of just mentioned indexation, tradable stuff, so replacing hard or impossible to hedge input price indexes with really tradable indexes, which give you the chance to hedge your exposure. Yeah, so yeah, in the end, Asia is following the trajectory of the West, and of course, they learned their lessons fast. So therefore, this goes certainly faster than we have seen in the past 20, 30 years in the Americas and in Europe. Yeah, so yeah, it is certainly the place to be here.
Okay, thanks for that, Frank. Ria, I'd like to bring you in here now. I mean, again, you have an impressive resume, over 15 years in commodity trading, working across a range of markets. You know, you've worked in the US, you've worked in the APAC region, and again in Japan. What's your thoughts here in terms of the rise in development, and also maybe how important is the concept of risk mitigation?
Sure. So I started covering APAC in Japan at Lehman Brothers because my Japanese wasn't that great at that time. So I covered the oil markets. Oil was huge back then in 2005. And then we've, seen that market go, grow. And then also, I think that shift has now come into, from a Japan perspective, a lot of like LNG trading from long-term contracts to spot market and then risk management. And we've actually seen the need for risk management because of the price fluctuation and the volatility in the market. And I think clients are a little bit, understanding that that is a very important part of their business because that is a very big base into their costs. So we've, spent a lot of time in the past 10 years with Japanese clients, mainly gas and power companies, to kind of go through their risk management and seeing and evolving with the market as the JKM market started on the spot market. So I think it's really interesting to see that change in terms of over the years, but the fundamental, the fundamental is really based on the commodities that they're actually importing. And I think Asia is a big importer as well. So I think that's kind of interesting.
I think it's really interesting. I think it's really interesting as well that, as Asia continues its development, the rise and the need for proper risk management tools, both for the physical and the financial markets, gets greater and greater. I mean, Stefan, I'd like to bring you in here. You're no stranger to risk mitigation. In fact, risk in many ways has been your bread and butter for the past 10 years. I'd be interested to get your take on this. How do you think the role of risk mitigation is going to evolve as Asia continues to evolve?
Yeah, thanks, Michael. And it's interesting to hear the different aspects that Erland and Frank and Ria already brought up. And I mean, I can just only echo that. I mean, the emergence of spot trading hubs is important. Then comes the indexation, and then the development of futures trading, forward trading on a bilateral basis, which is great because it shows that people apply risk management strategies and hedging strategies. Well, what is sometimes overlooked, and I think that's an element which will become more and more important in the wider Asia-Pacific region, is counterparty credit risk, right? I mean, Ria talked about her career in oil trading with Lehman Brothers. I mean, who would have thought that such a big name would go default? We had similar examples in history in the Americas and European markets. So what I see evolving over the next few months and years to come is clearly the the element of central clearing, because that will even leverage the growth path that we have already gone through in the Asia Pacific region. So I think, I mean, looking also at the developments that we've seen in Japan, we've talked about this in the first panel, look at the LNG market, look at the volatility also in the freight market. Central clearing and mitigation of counterparty credit risk is of imminent importance.
Frank, would you agree with what Stefan's saying here?
Oh, fully. We have to be honest. I believe most of the credit issues have been learned the hard way in the past in the US and Europe. I remember when the European market started, yeah, nobody really saw it coming that Enron went bankrupt, others pulled out, and like TXU, Mirrand, and these were all good names. Yeah, and there was this old thinking, oh, they will pay. Yeah, well, they didn't in the end.
So, no, yeah, that's right.
Let's just hope that, and also in a friendly way, remind our Asian business partners of this. It is not necessary to learn this the hard way. Just think about it, and you will come to appreciate the credit risk mitigation by clear trading.
So it's evident that the risk mitigation is an important factor in the further development of Asia, and obviously exchanges play a very central role in that. But taking it one step further, what else can exchanges do to nurture the further development of commodity trading in Asia? Now, rather than hear from the exchange boards on the panel, I'd like to hear Rhea and Frank's thoughts here. So Rhea, maybe if I can come to you first. In your opinion, what else can exchanges do to further drive development in commodity trading in Asia?
So I think it's really important to have like price transparency. I think that's a role that exchanges actually like bring to the table, as well as like credit mitigation. But being able to see forward prices on, you know, illiquid products is huge game changer. And we have seen that. And I've, you know, in the past have done a lot of JCC, which is the oil indexation for LNG in Japan. There's no liquidity there, and banks actually have to take that risk. That's been really hard to trade because you can't get out of that risk. But when contracts become standard and they're traded on the exchange, you can actually see it, and price transparency, you can see the volume. So I think transparency is very important.
Okay, so that's one consideration. Frank, over to you. What else do you think exchanges can do to nurture the further development in Asia?
Two thoughts from my side. The first would be going out there and doing maybe even more education and talking to people. Maybe also going the step, talking to people, to important possible participants more on a bilateral basis, because in a big venue, it's always difficult to ask questions. People are sometimes hesitant. And the other thing I believe which is necessary is to accommodate the Asian clients a bit better. A lot of the offerings are still centered around the circumstances and processes in Europe and the US. And I think it would be helpful to go a little bit further there to pull the Asian traders in and make it a little bit easier for them.
Okay, thank you, Frank. Before I go to Stefan, Erland, I'd like to bring you back in here because, as many people will know, you spent a considerable amount of time last year and the year before in Japan, you know, setting up what was to come from EEX. How did you find it? And also, you know, do you have any takeaways of what the exchanges can do to nurture this development? Because in essence, you were walking and talking that for a sustained period of time.
Yeah, I think certainly when we started, looking at Japan as a very separate market, separate region, because obviously we were trying to build a market for Japanese counterparties predominantly, and then of course bringing in our, liquidity that we had on the rest of the exchange into that market. But I think there's a couple of things that popped out for me. Number one, I think Asia is largely a little bit underserved when it comes to clearing connectivity. So the connectivity issue, people have different ways of trading. They try to trade with different banking connections and so forth. And a lot of, the historical legacy part of that was sending counterparties to a European bank, for example, who had connectivity to the exchange. And I think we have to change that somewhat, that dynamic. We need to enable clearing counterparties in the Asia-Pacific region to facilitate trading for their clients, even if the exchange itself sits in Europe. The second point, I think, which is not specific to Japan, but more universal across Asia, and it's been mentioned before, is that there are challenges along the whole value chain of commodities trading. And I think, as an exchange, our primary business is trade assurance, and liquidity, building up liquidity and mitigating credit risk. And credit risks pop up in quite a few other areas than derivatives markets. So I think, lending our infrastructure to other parts of the value chain, I think is also one of those big tasks going forward.
That's a really interesting point. Stefan, any other points from your perspective?
Yeah, I would like to take it a slight step back. I think to me, it's really sometimes down to the question, which kind of standards are there to trade a certain market? And I think this is where exchanges can play an important role in helping the market to get to a standardized product, a standardized set of contracts that are traded. I mean, if I just look back 2 years and look at the Japanese market, right? I mean, there was a variety of opinions how the market should be traded, which kinds of products, right? And I think this is where exchanges are not just EEX, I mean, it's the exchange sphere as such, can bring the experience that they have in building markets all over the world, together with the local expertise that exists there in the markets, in order to bring markets to the next level. And this is where I see strong potential in the variety of markets in the wider Asia-Pacific region. So it's a part of standardization and bridging the gap between domestic traders and the global trading sphere, so to say. Yeah. So I think this is where exchanges play a very, very key role, because otherwise the markets will be in their little bubble, and it takes exchanges to lift that to the next level.
Very important point there. Thank you for that, Stefan. I can't believe the time is running so quickly. So we're coming on to the end of the panel today. But before we go, I would like to pose one last question to all of you. Obviously, we're discussing Japan today, and we really are, in the center of that market at the moment. But there is going to come a time, 2 years, 3 years, where Japan will not be the next big thing. So what I'd like to do is ask all of you down the line, where or what do you think is the next big thing in Asia? Let's start with Frank.
Well, I think the next big thing will be centered somehow around decarbonization of our economies. Not very surprising. I see two aspects. Certainly, power trading isn't done yet. There's not much going on so far in Southeast Asia. You saw a first step from Singapore announcing importing power from Malaysia, being interested in diversifying power supply. Maybe there comes more. And the other thing is certainly huge demand for trading of carbon credits, abatement. The main thing here is to find a credible system which has some scientific backing and avoids all the doubts of double counting or being only paper projects. But once, and work is done on this, once this credibility is installed, I think that will be a gigantic market.
Okay. Erland, what about you?
Well, it's hard to disagree with Frank. Decarbonization is certainly one of those things that Asia is also certainly catching up on. I think what we will see, obviously from a product's point of view, it's good times ahead in a way, because the side effect of decarbonization is also the development of new product to trade on it. So I think, from my perspective as a product developer, the shipping market it's inevitable that will fall under some sort of carbon scheme, either through the ETS system in Europe or maybe even on a global basis. So I think certainly shipping carbon, which is a large polluter, will be on top of mind for a lot of regulators in the near term. And of course, the commoditization of that green value chain. So you have battery metals, you have other types of raw materials and finished materials that are increasingly getting commoditized simply because they're in such high demand. So I think it's definitely a decarbonization trend. Yeah.
Okay, so there's a trend developing here. Ria, what's your thoughts?
So I think, I think power trading is, a big aspect in the first step, but we are, as tradition, focused a lot on like renewable energy, as well as, carbon trading. And we have desks in China and Korea. So I think the market is developing, but I think the key for us is to create a software platform that provides that information. So I think, the market is great, but I think it's time for us to become more digital in terms of, connecting all of the markets together into one platform to be able to work on and look at and provide service for Asia as a whole. And I think that's a great thing for us.
Okay. And last but not least, Stefan. Steph, if you were a betting man, where or what would you be putting your money on?
Well, definitely, I would put my money on decarbonization, because I mean that's the story for the decade, for the 2020s decade, specifically in Asia, where we see a strong trend from conventional to renewable in the whole region. Yeah, and I think that will be the topic for this decade, and that goes along the entire value chain. Yeah, from generation to production, carbon abatement. We discussed about this. And I mean, look, we are there in Japan. We see a strong trend towards hydrogen there as well. We see carbon trading in New Zealand coming ahead. There will be so much more, and I'm looking forward for the next years ahead of us.
Okay, so there you go, guys. You heard it here first from the experts. Thank you so much to all the panelists for your thoughts today. I thought there was some really interesting points raised, and I think that what we can all agree on, that when it comes to Asia, it is certainly one of the most interesting and dynamic markets in commodity trading today, and I certainly can't wait to see what the next chapter unfolds with. Thank you very much again, and thank you also to everybody who's watched. And now we will go live for questions from the audience.